The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Paddy and Pete, and of course it's a week on, lads, since our 10 peak challenge. I found it okay, but you two whinging. God, my word, you didn't stop whinging. Every mountain, I can't do this. Just get on with it, lads. Yeah? Quitters don't win. Winners don't quit. I tell that to the kids all the time.
Well, we were whinging about your whinging, to be fair.
No, to be fair. Do you know what? I found it very hard. It's, in fact, one of the hardest things I've ever done since the New York Marathon, where I set off, and that was 15 years ago, and I was a lot fitter then. I was actually running a lot, and the problem with the marathon was I was too fit. I set off too quickly. I did 10 miles in like breakneck time. I was with a guy who was a bit faster than me. And
Mo Farah.
Yeah, and I said, Mo, I'm going to have to let you go, fella. But I hit the wall at about sort of 15, 16 miles, but I was doing, that's the thing, pace. But with the mountains there, that was, boys, my calves are still hurting. Are yours hurting?
No,
I'm okay now.
Come on, boys. It was hard. It was very hard.
It was hard.
Yeah.
It was absolutely hard, yeah.
Yeah.
When I, the first thing was, the thing that scared me first of all was when we turned up in the car park in Snowdon, and Tom said, "Come on, guys, you better go. Let's get going." I was like, "What? It was 7 a.m.
There was panic in his eye, wasn't there?
Yeah, there was. So don't worry. He was
really concerned about whether this was possible.
Yeah, Tom
was the first warning sign that maybe it wasn't possible.
Yeah. And Tom's our guide, who's like, not a bit of fat on him. He does that kind of thing for fun. And I did say, even after the first speak, what do you find fun about this? But he said, because darkness is our enemy. I said, it's 7 a.m. It doesn't get dark till 7 at night. What's the problem? And I thought, oh my God, there's a bit of seriousness here. And, I said, how far? Because I was led to believe, sort of, I don't know where you got this from. I thought it was just around about 20k or less. I said, how far is it? He said, 30k. So 10k more than I thought. And then, halfway around sort of things, he said, well, it is a challenge, yes. I said, is it hard? He went, yeah. Yeah.
He sort of paused and went, yeah, it's hard.
Yeah, I know. I thought, oh my God. And then halfway around, he sort of revealed, most people who come to Snowdon do 2 or 3 peaks in a weekend. We're doing 10 a day. I thought, why are we doing 10 in a day? What's the rush? Let's come back and see him sometime. But, honestly, not only that, I mean, the weather thing is nuts, isn't it? On the forecast, there was no rain forecast. On the first peak, we had hail and rain. It's like, where's this come from?
But what did me and Paddy say the day before? We said it's mountain weather, it's unpredictable, you've got to be prepared for everything. You didn't even have a waterproof jacket the day before.
No, I did. I stopped before I got the train. I just stopped at Sports Direct and got a cheap jacket. But oh my word! Do you know what? Oddly though, I did say I'd never do it again. But now I think I'm going to try. If we ever do it again, I'm going to start training properly on hills and mountains.
Yes.
That was the problem. I didn't have any mountain fitness. But yeah, you get to the top and everything like first peak. It's like hailstone, rain, and you get to the top and there's misty fog. It's freezing, and so you're sweating all the way up. You stand still for a couple of seconds. It gets freezing cold then, and then you go back down. You think, oh, good, go back down. Your knees and thighs are killing you going back down, and you may fall over. And some of those, and none of it was smooth ground. It was all like rocky, and even when you get the flat. It was rocky. It was like a spoiled walk. You think, can't we have a nice walk here? For heaven's sake.
Yeah, that was the toughest, wasn't it? Like you were walking on spikes, basically, the whole time.
I know.
Which was
I don't know what you were expecting, Justin, but yeah. Well done, though, Justin.
Yeah,
Fair
I don't
play,
know.
because
I don't know. I did it really.
You got through it. I think after about the 3rd or 4th peak, you were very close to jacking it all in.
Oh no, I was just on the first peak. After the first peak, I thought this can't be the first peak, just one of 10. Are you kidding? I thought maybe because on the way up, it's not straight up. You got a little bit down, up. And I thought we must have done 3 peaks already, yeah. And that's the first peak.
Yeah.
I thought, are you kidding me? I can't do this. And then I nearly gave up. That was the first half of the morning with 3 peaks. And then we crossed the road over to the other side of the valley. And then the 4th peak was, and I could not. I thought, if I get up here, my legs are hurting so much, I can't get back down. And they're massive, aren't they? If you look down, it's miles away. The scale of it is lost on cameras because when you take a picture of these photographs, you stand on the road or something. Now, it takes you about a half a mile to get to the actual peak, towards the bottom of the mountain because it's so far away, because they're that big. And you think, God. So even now, I sent my father some pictures yesterday, and I thought it doesn't do justice to the size of these things. They're all like over 1,000 feet. They're all like mountains. One of them we went to was not far off Snowdon's Peak. So they're all proper mountains. Like, we did 10. I thought, that's just ridiculous doing 10 in a day. Ridiculous. But I wouldn't have carried on, I think, unless you boys had nagged me and I said, come on. And Tom kept saying, no, honestly, it's now a bit better now. The 5th peak is not as bad. 7th peak, I need to give up again. So oh, my word.
And then we finished, and there was still a couple more peaks to kind of do to get back, wasn't there?
There was peak 11. I know, there was a peak 11. Tom kept saying, no, it's only a little gentle climb now. I thought, climb? Aren't we going down? You see, we have to go over these little hills. I thought, why don't we just go round them? We can't go round them. Oh, so anyway, but thanks everyone for sponsorship and all that. It was very good. And
I was going to say, we had loads of sponsorship, and thank you very much for everybody. And also, we've had one in this morning, so a week on. So
okay.
It's still open. So if people want to contribute, now you've heard Justin's ordeal and how much he had to put himself through.
Yeah.
And he said he'll never do it again. So maybe it's your last chance to ever sponsor him. So
yeah. Do you know what? Part of me says now though, if I do,
but thank you very much.
Yeah.
That's really good.
I hate being ill prepared for stuff, but next time I'd know what to take because I didn't really know. Right. I'd actually go to, there's only a hill around here, it's in Winchester, St. Catherine's Hill, but I think I'd do that about 20 times in a day, and I'd know I'd be there pretty much, so I got the backpack, because there was different kind of, because I was walking on a treadmill incline, so at least an hour a day. That has no impact for me. It didn't help me at all, I didn't think.
No.
But I think you boys are better. First of all, younger than me, but you do cycling, which I suppose is good for calves, isn't it? And legs. I suppose that and aerobic.
Definitely good for endurance. Yeah.
Yes.
I think my biggest issue with the whole thing was just I'm not used to being on my feet anymore. Like the days of walking around, like I used to do 30,000 steps a day walking around London and just getting in and out of town, and I haven't done that for years. So that was the biggest thing I felt straight away. My feet were killing me.
Yeah.
Okay.
So getting some miles, just walking again would have helped me.
Yeah, and I said to bring context for people, normally I just try and hit a minimum of 600 calories a day and 60 active minutes. We did close to 5,000 calories and 500 active minutes, so literally 33 kilometres across. That's a good walk, even when we get the car. So we walked down the car, didn't we? And then we got into Tom's car to get back to where we parked Pete's car. And even that was half an hour journey. And we'd done that across the mountains. So it's like, oh, that's nuts. So it was a good distance without hills and mountains, let alone with hills and mountains. So, listen, it's still there.
And also, Tom said it was the fastest he'd ever done it. So come on, we were good.
Yeah, I laughed at that thing. He said, I said, because on his website he said you need a bit of hillside fitness and aerobic fit. I said, Tom, this is more than this. This is quite extreme. You need to just tell people, because extremists would love this. It's a good niche market, but if you pitch into the average guy, it's going to kill him. I think you asked if anyone's failed. He said, we had one group where there was a mixed group, and this guy came along on his own. He was in the car park beforehand, saying, I've done marine training and all that stuff. This will be a walk in the park, literally. He got to halfway up the first peak, went back down, got in his car, went home. I love that kind of attitude where 100% super confident, and then thinking, "Oh, sod, this is too hard." Yeah. And, I'm glad he isn't fighting for our country in the Marines. Go. You get on the boat halfway across. No, it's a bit choppy. This water, isn't it? Let's go home. Come on. Anyway, so where are you, Pete? You're in France.
I am in France now. Yes.
What are you doing there? Is that work or pleasure?
A bit of both, actually.
Oh, work and pleasure. What are you having an affair with the secretary?
Yeah, pretty much. Just doing a bit of remote working again, because I can work anywhere, so might as well work in France for a bit.
Nice, isn't it? That's nice. Yeah. Anyway, markets, guys. It's now the 1st of October, which means we're in the 4th quarter. The S&P, right? So I mean, we've had 3 negative quarters. That very rarely happens, and even the S&P. I mean, this is on an AIM, but it's a streak that's never happened since 1976, where everything's the bond and all that's gone down. And so it's really we are in super bearish territory, And do you think? And I did put a tweet out. Let's have a look what we think. I said, do you think we'll have a positive 4th quarter? And what do you reckon, boys? What do you reckon?
Well, based on the past week, I don't know what to expect. So
this is AIM's performance. So end of Q4 to Q1 minus 17%, Q1 to Q2 minus 19%, Q2 to Q3 minus 9%. So it's getting less bad. So
we'll do another centre run, aren't we?
Yeah, Santa Rally.
Santa
That's
Rally.
it. So, yeah, that's it. That's always been
Santa Flat.
Yeah. Steve comes in on the. Hang on, Steve. You call the word Santa, and Steve's here. Is there a coincidence?
Oh, yeah, I love Santa.
Oh, I thought you were Santa then, Steve. Steve, thanks for joining us, fella. Did you hear our chat about the hills?
That's all right. I caught the end of it.
Yeah, no, I find it quite easy.
Did you quit after the first peak? Was that you?
No, I find it quite easy, but Pete and Paddy really struggled. I kept, come on, guys.
Oh, did they? Oh.
To dig deep, guys. Come on, let's go for it.
Yeah.
I said, this is
I knew you could do it.
Yeah, I know. And I think, I don't want to blow my own trumpet, but if it wasn't for me, I think they'd have quit. So I kept saying, come on, guys, come on, you could do it. Think of the sponsors. Can't let them down.
Well, I love Steve just coming in halfway through. Even the participants of this podcast don't listen to the whole podcast.
Yeah, that's the flexibility
Well,
of
as
podcast.
I said yesterday, even I could have started at the beginning, but you would have had me in the shower. So,
All right.
yeah, didn't think that'd be a good idea.
I don't want you anywhere. Yeah. that's fine.
So I was just saying, Steve. It's been a dreadful performance for the markets all year, around the world, pretty much. Like S&P in America, biggest index, down 3 quarters on a trot. We are now into the fourth quarter, and I did say, what do you think on Twitter? Do you think we're going to have a positive fourth quarter? What do you think, Steve?
I think it's going to be flat, personally. I just think nothing's going to happen over the next year or 3.
Yeah.
I just think there's so much fear. So flat would be good.
Yeah.
I can't help feeling we've got to have a bit of a recovery from the hit we've taken the past week, just because, hopefully, the Bank of England stepping in, hopefully has stabilised things a little bit, and things will recover. And they've got to do some form of U-turn or have a better plan before the November budget to actually do something that won't destroy the markets. So you kind of hope there would be a bit of a bounce, maybe. But that's maybe wishful thinking.
Paddy, are you positive?
No.
Okay, good. That's it.
Right.
But on the survey there, I did put it out. Do you think markets will see a positive fourth quarter? 39.1% said yes. 60.9% said no. Now, this is quite... I think this is a bit of a bearish indicator, contrarian bearish indicator, because when you get people that's so checked out and so not engaged, and in fact, is a survey here, retail traders are starting to capitulate, and you need capitulation. People are just giving up, walking away before the market can bottom. Last week was the second largest retail selling week in 5 years. 5 years. And the last time that happened, we tend to see a bounce. Like I said, if you look at the stats, the other day I looked at 52-week highs, 52-week lows on the FTSE All-Share Index. And I think on Thursday, there was one stock hit a 52-week high, 145 hit a 52-week low. And that that ratio, 1 to 145, is nuts, isn't it? And even on AIM, if you look at the stats on AIM, it's 85%, I think it's 86% now, of companies are trading below the 200-day moving average, and that's seen as the bull-bear line, the trend line between uptrend and downtrend, and only 15% are just above that, and some of those just spike up above it and drop back down. So, that's a huge ratio showing everything's been sold into. The selling has been historic. And part of me thinks, what's behind this? Okay, we got inflation, but we're not actually in fact, there's GDP figures out. We're narrowly missed a recession, apparently, in UK. It's not like we are in the worst situation ever. All I can think of is that it will get worse economically, but the markets are already pricing this in. Apart from that, is there something underlying that we don't know about? Like, if, for example, the pension fund thing. Did you ever know about that stuff? I mean, did you read about it in the week? What's happening? Why the Bank of England?
I didn't understand it. Could you explain it?
Yeah. Well, essentially, analogy-wise, this is why I said the Russ Mole. It's like the house is on fire. So the Bank of England say we have to put this house out on fire. It's literally, the fire is inflation, essentially. And so the Bank of England come along with their hose, start hosing it down. This is raising interest rates, the hose. So they want to slow the economy down. That way, less demand for products, prices go down. And you often see this after all gas prices spike in the past, recession follows and they collapse, pretty much. And that's pretty much almost like a 95% accuracy indicator that. But then, while the Bank of England is spraying the house with water here, along comes Liz Truss and Kwasi Kwarteng and starts lobbing fire bombs on the front of the house, And he says to them, what the hell are you doing? I'm trying to dampen down inflation. Yes, but we've got a growth plan. Oh, I'm glad you've got that. Cool. And so that spooked investors, because essentially the government are taking less tax. They've reduced taxes and they're going to spend more. So it's like a business saying, what I'm going to do is slash my prices in half, but in order to do well at this, I need to get some more debt because I won't be making a profit. And so you go to the bank and say, give us some money. And they say, why have you slashed your prices? You know, you were doing okay. He said, fine. But so the bank, you know, the Bank of England, so the government are going against the Bank of England. And so they're saying, okay, we need to reduce taxes, but because of that, we need to raise money, and they do that via bonds, you know? And of course, the international markets, the pound weakened, which is a strength of the economy, a signal. So that and they said, well, basically, the UK government now become a bit of a bigger risk because they've got a bit of debt, they're taking on a lot more debt, and we don't want to loan to them at like 2%. You know, the reward we want to get is a lot higher than that. So bond yields have shot up. And I didn't realise this. It was systemic contagion within the industry, and I didn't realise pension funds. Is there only a certain kind of pension? I think the LDI, whatever they're called. So what happens is they get bonds, they buy bonds, okay, and then that to them is obviously an asset because they own a bond that's worth some money. And on the strength of the ownership or the value of those bonds, they go and buy more bonds, but not in their entirety on leverage, so a loan basically. So they get loaned to buy more bonds.
Right, yeah.
And then they say, we got these bonds and all that, they're worth this, we'll get some more on leverage. And they keep buying on leverage. Bonds, more bonds. But of course, that's okay if the bond price is going up, because your asset value is going up. But all of a sudden the bonds sold off like crazy, and then the banks that are loaning these bonds saying, well, listen, you now owe us money because... And it's like basically stretching yourself to get a 110% mortgage. That's okay. So let's say let's say you buy a house for 110 grand, it's easier figures, and you've got no cash down whatsoever, okay? And that's 110% mortgage because you want 10 grand to do it up and stuff. And it's okay if the market's going up by 10% a year because then you break even after the first year. But if the market goes down, the house price goes down to £90,000, all of a sudden you owe 20 grand. So the bank will say, you need to give us 10 grand at least, you know, because it's 110% mortgage. Now it's 120%. You need to give us some money. But you're already skint. You're already sort of, you haven't got enough money to get a mortgage anyway. And your asset's gone down. So, I haven't got any money. So what are you going to do? You need to sell something. So these pension funds started selling their bonds to pay for the leverage. And so that, there's a huge industry. I think altogether it's $1 trillion industry. The pension funds started selling these bonds. So what happens is the yield then, it's the opposite thing. The yield goes up if you sell a bond. The price goes down. It's like a dividend-paying stock, So for example, if you have a stock that pays a dividend, let's say they say the share price is £1, and they said this year we're going to give you 5 pence in the pound for every share you own. That works out at 5%. Now, if the share price drops to 50 pence, all of a sudden that dividend is still 5 pence, is 10%, of the yield. So that's the way bonds work. They just drop. So that's what happened, essentially, unknown to the government. They made these pension funds, because the risk on the government debt went up massively because everyone started selling them off. No one wanted government bonds. They made these pension funds overly leveraged and exposed, to margin calls. And so a lot of this happened. And so the Bank of England had to step in and say, OK, we're going to buy long-dated bonds, 65 billions worth to prop up the price. Because, of course, if you've got a big buyer in the market, like any share prices, it'll rise the price. And if you've got a lot of firepower behind you, even on sentiment, people say, OK, the Bank of England stepped in. So essentially, the Bank of England, it's like embarrassing. It's like having, a father-son relationship where, the son says to the father, Dad, listen, I can run the business, it's fine. Honestly, I got a good plan for the business. It's fine, And you say, OK, go on then. And he steps in, makes a hash of it within the first week. And the father has to come in and apologise to the clients. So sorry, that's my son just trying something. So that's what the government had done, really. The bank is like, I don't know if they talk to each other, but, the Bank of England said, don't do that. Don't reduce tax because you need the tax. And of course, there's a run on the pound, which is confidence in the
This
currency.
is exactly what the OBR report would have told them, right?
Yeah.
If they bothered to read it.
Well, do you know what? The OBR report comes with every budget, and it's basically, it sort of validates it because it's an independent, person looking at the government's plan and saying, yeah, that's fine, the debt levels are okay. But when I read this like a week back or whenever it came out, I said to Megan, I said, look at that, they've refused to get an OBR report, which pretty much, just independent validation.
What was Megan's view?
She didn't really care. So I said, well, that's quite worrying, isn't it? It's showing lack of transparency. You need an independent sort of set of eyes over this. It's quite
It's massive arrogance, isn't it?
Yeah.
This is what we want to do. Oh, we're not going to listen to you people. You're going to tell us it's bad. No, we're going to do it anyway. This is basically sort of A-level economic, not even A-level, GCSE economics, just role play.
Yeah.
But it just happens that millions of people are now going to have to pay the price for that.
Yeah.
Don't you think it's like the soundbite politics, isn't it? Of like, big headline things they want to go out there. Yeah, I want to tax cuts and be the saviour. And it's like, but you got to have economic policy behind that, and you've got to have a long-term plan, and how is it all going to be paid for, and all these things, not just the sound bites that everyone to try and get your popularity up. It's just insane that we have this kind of political system, let alone this government. But it
is insane. It seems like, I don't particularly think it was a bad thing. Some of the things were bad. I don't think you need to give bankers bonuses, or what's the point, taking the top rate of tax off? People are not leaving the country because of that tax, and you're collecting tax on it, so that's good for you. You need that. It's not like we've had loads of billionaires saying we can't afford this tax, we're leaving. It's not extreme. I understand if you tax on 90%, you may get a flight of talent on money, but it's not that. It's like 45%. It's not it's fine. No one was complaining about that. Why cut that? I don't understand that. Why give bankers bonuses? Should have got enough. But I understand the growth part of it, but I think it's very ill-timed. In an inflationary environment, you don't need to do, and the new governments want to do something. They shouldn't have done that. They shouldn't have done anything to stoke the flames of inflation, and that's what they were doing against the Bank of England.
Corporation tax, that's, bringing that up to 23% was agreed a long time ago, part of a global thing to try and crack down on tax avoidance. Obviously companies would prefer not to have to pay that, but if you really want to help out businesses, do something about business rates, because that's where people really are struggling.
Yes, business rates.
Focus on that.
Yeah, exactly. You hear businesses whinging about business rates all the time, don't you? It's not just, they're not just saying that for a laugh and try to get away with something. You do hear people whinging about business rates all the time.
The business rates prices are absolutely insane, and it's before you've even done anything. It hits you just from the very beginning of your business, and it carves out a huge chunk of any potential profits or your cash flow. It's a real issue. That is a really stifling thing for small, medium business sized businesses, and that is an area, if you really want to get people growing businesses and starting being entrepreneurial, that's the thing to focus on. Well,
do you know what the worrying thing was? Is obviously yield shot up and everything like that, and attached to that is mortgage rates. They've got I think it's 1,200 or more now. I didn't realise there was that many mortgage products on the market, but there's like 1,200 mortgage products pulled from the market. So if you can afford, people are saying the mortgage rate could go up to 6% or interest rates could go up to 6%. Now, first of all, if you can afford that, there's not only affordability, it's availability. So if you can get a mortgage, if you can afford to pay one, can you find one? It's like they've all been pulled. So the impact of that, not only that, car loans, all that kind of stuff, all kinds of anything on a loan, it affects. So they've done the very opposite. If they want to stimulate growth, then all of a sudden they've just messed it up completely, because they're stifling growth now, because some of these rates are going up crazy. And of course, if you look at house builders of the last week, Big Barrett's, Taylor Wimpey's, the FTSE Persimmon, the FTSE 100 boys, they've fallen by over 10% in a week, because of course there'll be lack of house building, there'll be lack of mortgages going through, solicitors, all that ancillary sort of sector is taking a bit of a hit at the moment because of the mortgage rate. And it's just a bit worrying, isn't it? You think, what have you done? What are you doing? But the thing is, they're saying now, if you want to see where the stock market bottoms, look at the bond prices, because they lead every time. And when yields peak, that means when the bonds hit a low, start bouncing, they'll go first, and then the equities will follow. And they're saying this, though. Now, the Bank of England stepping in is the first central bank, because every central bank around the world is raising interest rates to slow down growth a bit, to get inflation under control. Because they can't control inflation. They can reel back on interest rates. They can pull them back down if they've gone too far. But they don't want inflation to pop back up. So they're saying the Bank of England is the first bank to blink, essentially, in their quest for, the Fed, for example, the biggest central bank in the world, keeps saying, we're going harder for longer, we're going to keep going until we get to 4.25%, whatever, and then we're going to hold it there for at least a year, something like that. Now, they keep talking, they're trying to talk inflation down a bit, because it's scaring the markets. But they're saying the Bank of England pretty much blinked here, because they've done the opposite. A week earlier, they announced they're raising interest rates and doing QT, which is actually selling bonds. And now they've rolled back on that and they're going to buy bonds. And a lot of people in America are saying the Fed is going too far, too fast. You don't know the effect of this of these interest rate hikes, because it takes 6 to 18 months to kick in, all of it, because businesses start feeling the pain a bit further down. So maybe we'll see. I genuinely think that, I mean, someone from the Fed committee was on CNBC a while back, he's retired, but he's saying, I believe the Fed are trying to get all the heavy lifting done this year, get the rate up to about 4%, and they're going to sit and see what happens then. I think that happens if we see peak rates, then at least the direction of travel is known. And we think, okay, we're not going any higher there, and that will give the markets a bit of breathing space. And I think we'll rally. I don't know if it'll be a bear market rally, but I think that's the way forward. So it's just once the change of direction of stocks, because at the moment we don't know how far the Fed's going, and that's the biggest bank. And of course, there's huge dollar strength because they're ahead of any other central bank in raising rates, and it's the fear that we'll have to catch up with them as well. But so I think if you look at anything, if bond yields start to fall, they have been. In the last week, they did rally quite strongly, so they're still above their norm, but they're starting to just hit their highs and fall off a bit now. That's when I think the markets will start to rally. So bonds first, then equities. That's the way to look at it. Anyway, and it's been results season. Did you see any results, boys? Any results come out?
I thought XPF and GTech, I thought both pretty reasonable given everything that's going on. I thought it was quite positive. And in a better market, we'd probably have seen a really nice uplift. But there you go.
And then, do you know what? I just genuinely think XPF, those results. And I did say, by the way, I said, in a bull market, you can afford to make mistakes, and the market will be forgiving. If a company comes, because when there's money inflow, if a company comes up with bad sort of results or results below expectations, it'll take a little bit of a hit, but we're 10, 15%. In this market, you're doing 50, 60% drops on bad results. Now, XP came up with blow the doors off. Excellent results, I thought. The plan is happening. This ambitious roll-up we hear about, it's working. All the margins are in line. Look at this. Revenue up 590%, to 8.1 million for 6 months, this is. Gross profit up 536%. EBITDA up 234% at 1.1. Cash at 5.2. This is now based on 17 boom sites, 19 escape hunts. They'll have another 10 sites by the end of the year, a boom, another 2 sites of escapement and more franchisees. And yet we're going into now the busiest season for them because, you get the likes of Oxford Street Open, which is like three times the size of a normal boom battle bar. It's got escapement in there. And I just said on the webinar this week, I said, they are going to be back half weighted. But in the report, they said all margins for escape are better than we thought. We've seen no discernible drop-off in trade. So, as yet, it's not, they're not being impacted by the cost of living crisis. And you've got a huge, quarter coming up where people go out for Christmas parties. And I said, as a result, as a measure of this, how many times do you normally go out socially of a year in the first 3 quarters, and how many times in the last quarter? And you tend to go out 2-3 times more than you have a Christmas period than you would do the rest of the year. And I said, that can be done with, look at revenue. I mean, footfall will double, triple in the next quarter. So it's back-end weighted. So that, 590% increase to 8.1 million, you could probably double that. Especially you've got sites like, more sites open as well, 10 more sites open. So, I think they're storming. It's all going to plan. And yet the market, what happened? We're up by like 2% and then just dropped down by 1%. It's like, come on, guys. What's going on here? It's nuts. Steve, you're right. You fighting with someone?
That's not me. I think that's Paddy.
Peter. It's not me.
Not Paddy.
What are you doing, Pete?
It's definitely not me.
Just you're drinking wine being in France?
Yeah, that's right, yeah.
Oh. What time is it?
Anything.
What's that? Pete's in France, Steve.
Yes, I'm aware. I'm going to see him next week.
Yeah.
Are you? Ooh. I didn't get the invite, to be honest.
You did.
Yeah, he did.
What? Did I?
He did.
Oh, okay.
He did, but you just refused it.
Oh, okay.
You have to work in your sticky garage.
Yeah,
You can't go to France.
I do realise when I was chatting to you boys in the car and all that on the other weekend, how much more travel you do than me. It's literally, Paddy said at one point, what's one of the best countries you like driving in? I thought, what are you talking about? I don't drive in any country. I drive to Asda, down the road and back. A school run, I do the school run. I do that quite often, Take the kids to basketball. That's pretty much... and boxing. Winchester, that's twice Winchester, basketball and boxing. So that's 15 minutes up the road. It's pretty impressive.
You work in your garage more than us.
Yeah, that's what I think. I was like that. But, so anyway, so that's annoying. XP factor there is it didn't really... I genuinely think that now, looking at this company, just look at the valuations of this company, it is... in fact, I'll bring up a little spreadsheet here. But yeah, it's the investment case is intact. In fact, like I said, it's improving on escape hunt. The margins are better. There's no drop off in the footfall, and I think there will be initial. Do you know what you realise? You almost sometimes brainwashed by the mainstream media. I hate seeing MSM. I hate that kind of term, but. When you hear all these stories of people struggling, a lot of times you think that, okay, there are people struggling. We know that. There are definitely people struggling and they should need to be looked after. But the majority of people, I think, or in fact, when you focusing it right down, when you're looking at the clientele, the people who visit boom battle bars and escape rooms, that's not the same people who've been focused on in the media who are struggling, essentially. So you assume they're going to get hit, lack of footfall. It's not the case. You get youngsters.
I was out in London on Thursday. I've never seen it so busy.
Same. I was there last weekend.
Absolutely, it's like every pub was like
exactly.
heaving. The streets were like it was hard for cars to get down into. So many people out. In all the years of working in Soho, I can't remember seeing Soho so busy.
Yes.
Wow. But not only that, I went on it was a Wednesday night. It was a really midweek, and I just said to my mate, "Is it Saturday night?" Literally, just
I know.
So busy.
Well, I said that well, but imagine when they opened Oxford Street there, huge store. It's got a super site, It's got massive square footage. It's got, that'll be busy, most days. In fact, I say I don't go anywhere. On Tuesday, for some reason, I don't know why, I went to Prezzo in Eastleigh there, right? Tuesday this was. We walked in there, and we did the same thing, Steve said. This is the weekend or something. It's a Tuesday night. It was like, I say, 3/4 full at least. It was buzzing in there. There was loads of people in there. And I thought, where's the cost of living crisis then? We only went there because we got Tesco vouchers, so we paid very little for them, which Megan's mother gives us. But literally it was very busy. And I thought,
is everyone using Tesco vouchers?
Yeah, but...
It's full of people with vouchers.
Yeah, but do you know what, though? It's still money in the system, isn't it? I don't know how that... How does that system work with Tesco? What did Tesco get from it? I don't understand how that works. Do you? Did Tesco pay for it? What?
Loyalty.
But so Tesco pay that bill, do they? Completely? Or is it some kind of discount as well?
Would you get the whole...
So you can
pay...
pay...
a certain amount, is it?
Yeah.
I don't know how they work.
So Meg's mum spends... if you use a Tesco credit card, you get points. And she's a big spender. She loves spending. But so basically she doesn't go to Prezzo and stuff. So she gives us the points. And you can't pay for alcohol, but food you can. And there's obviously certain specials on the menu you can't. But essentially we go in there, 4 people, 4 pizzas and maybe some chips, whatever, starters. And I don't know what the bill comes to, but it costs us we have to pay the top-up bit, but about £5. And the rest is paid for in vouchers, just 50, 60 quid's worth of vouchers. But anyway, it was jam-packed. So you are led to believe from the media that everyone's sitting in their houses with electric blankets on, with the lights off, And actually, that isn't the case. There's, especially Boom Battle Bars, a lot of students go to that. They don't
Just
care.
me.
Yeah, Do you know what, Pad? Right now, I've got my electric blanket. I've had this in my office. Last few days, put on my legs. My hands are freezing though. I can't type. But last few mornings have been quite chilly.
I've looked into this. You can get typing gloves that have got the fingers exposed and heating on the back.
That's what I need because my hands get freezing. Wow. It's not so cold this morning, but last few mornings I've been doing that. Have you put your heating on, boys, at all yet?
No. Not at all. Of course not.
No, not at all. No, it's not going to go on until at least January.
Okay, I got to admit, boys, I put it on yesterday. Yeah, no, but what I did, I said, right, Megan was like, I said, Megan, I think we should put the heating on because it was getting very cold in the evening. Very cold. And the house was just feeling, damp and cold, basically. She said, not damp. I said, well, it feels damp cold. I said, we don't want damp climbing into the walls.
Well, no, that is important. You do, in houses, you do have to heat it every now and again. Otherwise it will get damp. So, like you can't not have the heating on. But
yeah, so I said also, we got to make sure the boiler's working. We're breaking down because the bill from that will be worse. So let's, she said, no, not till November. I said, you don't go by that. You go by temperature. I said, you may get a cold October and a mild November. But by your...
Hang on a minute. Check your boiler works. You're using your boiler all the time for hot water.
All right, Steve, she didn't know that. Shh. It's a combi ball, I know. But so I said, what we'll do is this. Well, at the moment in the house it was 16 degrees. Now, when you go for a dog, I don't understand this. I walk the dog, it doesn't feel like cold. So even when I start walking but in the house that feels cold. I don't understand why that is. So I said, we'll put it on at 18. That's all. 18 is still jumper. You'd still put a jumper on, but it takes the edge off. Just the cold edge off the. Just takes it off. And so I put it on last night, 18, and even then makes it still cold. I said, I know, but it's not as cold as 16, is it? And yet we're not, you're going to get, because did you see Liz Truss? What an idiot. She kept saying on those interviews, you'll get £2,500 cap, that's the cap on the bill. And so, Liz, do you not know your own policy? Are you simple? You don't get a cap, 2,500. That is not, it's usage. That's the average. If you use this amount of energy, then you can go in a maximum you'd pay was 2,500. That's only if you use that amount of energy. If you use more energy than that, if you go above that energy usage cap, you get paid extortionate amounts. Yeah. So she does not understand that, her own policy. That's nuts, isn't it? And that's why I quite like eEnergy, because companies, regardless, there's no cap. There's no cap. There's a limit there on energy usage. If you go above that, you'll be charged extortionate amount per unit. Now, most businesses, they have to probably go above that. They can't just say, oh, sorry, we're going to have to switch the lights off at 9 in a pub because we go above the cap. They can't do that. There's energy there they need to use. So, companies have to be super efficient now. That's very important, and that's what eEnergy talks about. So, 30% of energy, they say, we identify as wasted. Now, you imagine that. You can bring your energy usage, and it's all about usage. It's not about caps on money. It's about usage. So if you can bring your usage down, so that's why I said, Megan, we will still be below the usage amount. I don't know if we will. We probably will. We don't use it a lot. So most people put 20 degrees, 21. We'll have it on 18. Just take the edge off. That's what I'm saying. Yeah? So, anyway.
That's how you help companies then, isn't it?
Yeah.
Rather than just giving them a blanket tax cut, you say to them, right, well, you can use investing in your company to help on energy efficiency against your tax. Yeah, we'll make that massively tax efficient. Yeah. And we will also bring down the price for energy for businesses as well to make that the most competitive in Europe. If you want to help businesses, if growth is your driver and that's something you've identified as a way of doing it, those would be measures that would help. That would have not spooked the market and actually help business, rather than just saying, cool, have a 4% corporation tax cut.
Yeah. Incentivize businesses to get that way because it makes sense anyway. Why do you want to waste energy? It's not efficient. So incentivize efficiency. Anyway, just quickly back on just XP sort of the broker forecast here. So the broker forecast, they did 8.1 million. This is they've reiterated this forecast, so they obviously know the metrics here and the footfall. But they say 8.1 million for the first half. They think they're going to hit 25 million for this year. 25 million revenue this year. That's on all the new openings, bigger stores and a very busy last quarter. And then next year, that's a 262% increase from last year. Then 2023, pretty much 40 million in top line revenue. You're talking about EBITDA 6 million, pre-tax profit 2.2, then 2024, and this is only when they just started. This is now when the sort of I suppose the cost, the capex operational cost as well of opening these sites is quite expensive. Once you get most of them done, like I say, if you have 30 boom battle bars and you open 5 in a year, it's not as onerous as having 10 sites and opening 5, because of course it costs a lot of money. So once they start to get in 2024 and beyond, then they start chucking in lots of cash, because 2024, 52 million top line, 10 million pretty much EBITDA, 6 million of profit, and beyond that they start paying a dividend and they really start chucking out cash, because of course most of the heavy lifting, the capital expenditure has been done. So this is starting and I think by then, of course, I think pretty much we'll be out of recession if we're in one by then. So I think we'll be flying. This is one of those companies that has a route to mid-cap and a plan there and a roadmap. And of course the share price has taken a massive hit, but right now it's cheap. It really is. They're trading on 4 times EBITDA. I look for companies below 10, pretty much. They're growing quickly. And EV revenue of less than 1, half of 1. So I look for around about 2. So they're cheap. They've got a roadmap to excellent scalability and cash generation. And but there we are. Hey, do you know what? I'm just on a little bit of politics, Pad. Oh, in fact, talk about just one more thing on energy, eEnergy. That was annoying. Did you see the result from eEnergy? They came out with a launch of eSolar. Now, you have to understand, right, this is not their business, eSolar. It's part of their business. They have an integrated, end-to-end offering for businesses. First and foremost, they start with waste. So these award-winning smart meters, people put in, they say we can identify 30% waste, pretty much. In fact, they just tweeted that yesterday. 30% we can identify straight away, but you have to know where you're wasting that. So they put these meters in, link it all up, right straight away there. Then they start off with say, okay, your lighting's really old, out of date. We can put e-lighting in there, LEDs. We can measure all that as well, bring that down. Then we'll have a consultancy. If you want ongoing reviews of all your figures, the consultancy there, the contracts last for 6 years, pretty much. They're recurring. And like I say, 88% of their revenue is contracted before the quarter started, for quarter one. 40% of this year's revenue was already contracted, and these are long-term contracts. But they announced this, eSolar. So they've already got, 9 megawatts contracted from customers, which is the equivalent of 30,000 standard 300-watt panels. So already a big chunk. Now, back in May, they said they had, I think, 2.5 megawatts, which was worth about 8 million in contracted revenue. So from 2.5 megawatts to now 9 megawatts, and yet, the share price went down because someone came in, sold some. I think, what are you doing? And that's the market. People, like the pension funds, sometimes people who are a bit distressed will take money from wherever they can. So a company comes out with a good release, a good update, and it's a liquidity event where they can reduce their holdings or get into cash a bit more if they owe some more money elsewhere. So that's the market we're in, But I think this will re-rate again. They're now less than, their market cap is less than their actual order book. They've got an order book of 25 million, contracted, signed, ready to go, and yet they're now worth 24 million, something like that. So it's nuts, and a lot of that is forward contracted. So, so it's a bit nuts. The market's just nuts. And we'll look back on this and think, God, that was cheap. Companies are trading way over one-time sales. Pat, do you know what? I don't get too much into politics, but I don't know if they'll deliver on it. But I think Labour, I did do a poll on this. Did you see that poll I did on Labour Conservatives? Did you see that? I did say, after the mini-budget, I did say, if there was a general election tomorrow and you had to vote for one of the major political parties, which would it be, Labour or Conservative? Now, you have to understand, I assume people who follow me, investors, traders, are a bit more, leaning towards Conservative, That's what I think, anyway. There's not many socialists, not a huge amount of socialist sort of traders, investors. There may be, quite a few, but not as much as Conservative. And yet, the results were way in favour. I think there's about 60, I'm looking at it. And also, good response on it, about over 1,000 votes on it. And yet, I think I'm scrolling down. God, I didn't realise I tweeted so much. I'm scrolling down, but there we are. 58.5% said Labour, 41.5% said Conservative. It surprised me how many people still vote for Conservative. They've done the worst. You couldn't do a lot worse. What do they have to do for people not to vote for them? It's nuts, isn't it? Absolutely nuts.
Yes.
But no, what I'm saying is the party political conference, I quite like what they're saying on renewables. I don't know if they can deliver on that. So there's a lot of hope there. But at least Starmer now is looking forward a bit and think we need to double down on it. Looked at tripling and quadrupling battery storage, solar, all this. And honestly, that's appealing to me a little bit. Starmer's not. I still think he can't deliver very well. When he speaks, he doesn't deliver the hope. He's a bit... I don't know. But they talk... In fact, that Rachel Reeves, I think, was more impressive than him. But I think
this is something that I think over the next 18 months they'll start to try and push out. They need to show their strength in depth. It can't just all be about Starmer. And his character is the steady leader. I was listening to something this week with someone who knows him really well.
Yeah, I heard that.
Like an old
quite
friend.
nice.
What was that? What was I listening to?
They say he's quite a nice, funny guy when he's not on.
Yeah,
on
saying
camera.
actually he's really funny, and maybe was it the news agents or was it the rest in politics? I can't remember.
Yeah.
It was somebody who knew him well, and they were saying that actually he's very charismatic. The role he's playing in front of the camera is someone who's actually quite solid and just trying to keep it level. Yeah, and against Boris Johnson, I guess that was probably the sensible thing to do, and maybe against the vacuum of charisma that is Liz Truss, some more of that will start to eke out over the next couple of months. Yeah,
because she was dreadful in those BBC interviews. Absolutely awful, wasn't she? And she wouldn't answer the question. She was just dreadful. And I think, Liz, you're not answering the question. You keep going back to energy and all that stuff. And that woman said, Liz, the markets have crashed since your mini budget. All this, where have you been? And she said, well, I think no one can argue with the energy policy. No. Where have you been the last 4 days? The market's been in turmoil. Where have you been? So, and she was visiting Zelensky, I think, wasn't she? But, I think what Labour are doing here, they are, more than before, they are giving a little bit of hope to business. And they did before. They were. It's got to be two ends. You've got to support, obviously, lower income families, which they've always sort of said. But you've also got to give because the business people don't really trust Labour and their past record. They've got to give a bit of hope to business and say we are going to grow. Yeah.
Like, what have we had over the last 12 years?
I know.
Absolute chaos.
Yeah.
The idea that the Tories are the ones that understand how to run an economy is just. I mean, surely businesses and just normal people have to realise that isn't the case.
Yeah, but do you see that? Who's the lady who got moved to... Owen Jones interviewed. Do you see that? Owen Jones, the lefty socialist guy. Is it Owen Jones? Is that his name?
That's the name, yeah.
Yep.
I don't know what he did.
That is a name.
Yeah, Owen, that guy who's a lefty sort of, camp guy, he's always banging on. But he's gone left of Labour. Now, what I understand is this. Labour's... They never win, ever, an election when they're very left. They don't appeal enough here. So they're going more centre now, which makes more sense. They go more Blair-like. And you have to understand, that's the way to win Conservative voters. Understand business and really say you've got some confidence, you want business to thrive. Because, a lot of the socialist policies are like, we don't care about business too much, we just want to help poor people. Now, you can do both. You don't have to say it's either
Owen
poor...
Jones's points are generally, well, I mean, he comes up with some strange stuff, but, he needs to set up a new party. That viewpoint is well represented across the country, and there's lots of people who agree with that and to various degrees, but the idea that the Labour Party's main manifesto policies and its main attitude should be so far left is just not ever going to happen. In our system, once we've got proportional representation, if that ever happens, then sure, that's where that party could do well. But at the moment, it's just naive idiocy to think that you could ever win a national election on first past the post with those sorts of policies. I mean, Corbyn got really close, but
he got stifled.
Corbyn had some more charisma, then maybe he could have got some of that stuff over the line.
But Brexit, you said, didn't it? I mean, a lot of people who normally vote Labour also didn't wanted Brexit as well, so that skewed a little bit. No, but Owen Jones, who's the Labour politician lady from Birmingham who stepped down? She's on Have I Got News for You. She's quite outspoken. But he was big in lefty, saying you've abandoned socialism. She said, no, I haven't, Owen. But you have to understand... you can't do any of these policies unless you get into power. Now, we're not going to get into power if we stand to the left all the time. We've never done it. So the only one who done it in the last 20 years, whatever it was, 25 years, is Blair. And he went to the centre. He took over the centre. And you're right, the Conservatives have gone to the right now, and Labour go to the centre, and they'll win. And I think on those policies there I saw there, I wouldn't be too worried about it. But previously, I'm one of the guys who worry about Labour and what they do. But now I'm thinking, do you know what? I'm getting a bit more confidence in them. And look at it's not only about winning; it's about losing, is it? It's there to lose. Now, at the moment, I think, depending on what they do, but the Conservatives are looking like they're going to lose it because they are losing. But everything they're doing is they can't do anything right.
Well, against the backdrop of Brexit and everything, the catastrophe that's been for the economy, like anything Labour, like the idea that any Labour policy could be as bad as what the Tories' flagship policy for the last 10 years has been, is ridiculous.
When is the next general election?
2 years.
She said 2 years, yeah.
Yeah.
For some reason, I thought it was next year.
I think it could be next year, but she said she wanted to leave it as long as possible. It could be any time now.
Who you vote for, Steve?
Well, I don't tend to mention publicly who I vote for, but Labour.
Yeah.
Breaking policy there. Yeah. I would never vote. I would never vote for Conservatives again after what they're doing at the moment. So.
Well, I don't say that. I mean, I say to me, who makes more sense to me, and I also want, I just do think sometimes that some of these policies, it's almost like they are setting themselves up for a fall. Some of these tax cuts for wealthier people, you don't need them. You don't need them. You don't need to do that. You don't need to give bankers bonus. You don't need to remove the top rate of tax. You don't need that. Why are you doing that? It's like, these people are not complaining. These well-off people are not complaining. They're not leaving the country. So why take away something they've not whinged about? So I don't understand that. Okay, last thing, of course, it'll have a massive impact on the markets. It has. I want to talk about Russia, right? Because Putin now is up the game, up the ante. He's just had the scam election. That's nuts, isn't it? Scam election. I could do this with Wales. You know, you go to Wales, just film a couple of people signing some documents and stuff, saying votes. Yep. Justin has now annexed Wales. It's official. Have a little bit of ceremony. You know, have some AI and all that in the Principality Stadium with thousands of people waving, yay! And then no, you cannot attack Wales now, otherwise you're in big trouble. It's my land. And I'm thinking, I think Putin eventually will go the way of Saddam Hussein and Gaddafi. Because people don't want to go, there's the people who are being mobilised will be slaughtered as president. He can't do it again. He can't remobilise people because already there's lack of enthusiasm for it because people are getting killed. So he's got to win something here or do something. People are saying nuclear option, all that stuff. But I think now this is the last chance because, let's be honest, Ukraine and NATO are not going to give up. So I don't know what he's going to do. He's really against the wall, isn't he? And I think there's internal problems, there's internal pressure and resistance against what he's doing. So eventually, if they lose now, if all these young kids or whatever or old people get slaughtered and they're not well trained, let's be honest, and I think it will happen because let's be honest, Ukraine now have been fighting a battle for like close 9 months, and so they're well trained, they know what they're doing, and they've got good weapons. But you bring these new recruits in who have no idea what they're doing. If they get slaughtered, you can't get more people, can you? You can't keep remobilising all the time because Russia already is a bit scared of what's going on. Why are you sinking more people into that war when it was supposed to be a 3-day war? So I don't know. It's a bit. Do you see the nuclear option happening, guys?
No.
Why?
Well, it could do. Well, I think Putin's on a hiding to nothing, isn't he? This will be his end game. I mean, it's going to play out one way or the other. It's not just going to resolve when he'll go live quietly in the country. So who knows how that's going to end? But yeah, it's pretty scary. But I could see it happening. Yes.
Can you part of what I think is this? Someone said this. I don't know who it was, but saying most of these guys at the top there, you know, they're embezzling funds from national, oil and gas companies for years. They're billionaires. Putin's one of the richest guys in the world. Now, at the end of the day, if he's got a choice between sneaking off to a bolt hole somewhere, a palace that no one's going to touch him at, or having an uprising with his own country, a nuclear war, and kill himself and his luxury lifestyle, what would you choose? Unless you're an absolute maniac, and he's not a complete maniac. He's not a complete. He's a bit nuts, and now his ego driving everything. But is he that unstable? He commits suicide pretty much, rather than just retire to a palace for the rest of his years somewhere.
Who knows?
I know. Well, I know I'd choose. I'd just say, just say I'm retiring now, actually. I think we've done very well in Ukraine.
I've had enough.
Yeah, very well in Ukraine, but I'm going to now, I've done the heavy lifting. I'm going to pass it over to the general here. I did like that. Did you that meme on Twitter which says his picture of Putin and his top general there saying, the war in Ukraine, in a word, how's it going? Good. In 2 words, not good.
There you go.
Marvellous. All right, boys. Steve, what are you doing today? You out and about? Everyone's out and about, apart from me, Ian.
I'm off to up London way now. So
London way.
Got a job tomorrow, so going up for a little social today. Enjoy, and then working tomorrow.
All right, it's all happening.
Good work.
Paddy, help me out here. You doing anything exciting?
Paddy's dropped off.
Oh,
He's gone to B&Q.
Exactly.
Paddy's to B&Q.
So my day consists of this: taking the kids fishing, which I have to sit there and watch pretty much, and then all I have to do is untangle their lines, which is so frustrating. I'm so wound up by that. Dad, have you untangled my line up? Can you? You mentioned this fiddly little thing for half an hour, trying to get a line and just in there, just cut it and start again. And that's really annoying. And that's it then. Maybe have something to eat. And all I look forward to really is have something to eat tonight. That's it.
That's rock and roll.
Yeah. Yeah, guys. Well, enjoy the weekend, and I'm quite bullish on the fourth quarter because we've had such an historic bad 3 quarters. Generally, you don't get that. You don't get 3 negative quarters in a row. So and I think maybe we'll see some easing from the Fed. That's the key thing. Keep an eye out for the Fed, guys. I know you will. But you want Jerome Powell to say, listen, we're seeing inflation start to tick down. And so the interest rate trajectory is going to stay here for a while. We're not going to get any higher. But hopefully that'll happen in the next month or so. And then we'll have a big rally for Christmas. Already,
Okay, fingers crossed.
already though, Megan's put Heart Xmas on the car radio. We're listening to Christmas tunes in the car.
The tree's due to come up, isn't it? She was about a month earlier last time, wasn't she?
So I know nuts, but it is odd though. Listen, to that it does make you feel a bit. I'm not a huge, massive fan of Christmas. You put them on though, and I think, oh, that's quite nice. It's what is it about that? It's just familiarity of the songs, isn't it? All the family, all know them, and you don't get that with any other time of the year songs. I suppose it's just that recurring. Saying that they get so boring after a while, don't they? Right, marvellous stuff. Have a nice weekend.
Cheers.
Big next week.
Cheers.
Bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.